path. Well, there was a breakout 2 days ago, and obviously sat follow through since. I don't know what you're waiting for. I mean, sideways. It's going now. It's having followed through now. I don't know what you mean by if I want to see it go more sideways. It had a setup on 2 days ago. I passed on it. It was a little bit too illiquid. And I never like when there's very few setups out there. When there's only like one or two great looking setups, it's generally not a great environment. I'd rather wait for it. It doesn't mean they can't work. I haven't had any good. It's too random. It's also the same thing with BNTX. It's literally, there were like literally only two good-looking stocks, and was Roblox and BNTX kind of broke out of this range yesterday late day. And if it was January or February, I would have bought it late day when it broke this range. I would have bought. But now I just, whatever. I just wish I had the foresight to buy GBTC on the opening range highs. But I didn't, at least I did cover near the lows. But yeah, I just wish I had the foresight to buy it. That was a great undercut at the 200 and reclaim. Some offshore brokers use 500 or offer 500 times leverage? That's insane. What's the math there? The stock goes the whatever you buy goes 0.2% against you, and you wiped out. Is my math correct? How does that even work out? Like most people would instantly get liquidated with that type of leverage. How does that even work in reality? It's just insane. Yeah, 500 times leverage, 500 times profits. True. But that assumes you buy at the exact correct time, so the whatever you buy doesn't go down 0.2% after you bought it. You really need an extreme amount of precision. Yeah, like something, if you study history, something you leverage kills. It really does. Excessive leverage kills. A little bit leverage, that's not a problem, especially if you have very specific, exit rules. But if you study all the blow-ups in history, they're all because they used excessive leverage. It's the same thing over and over again. Yeah, Bill Wang is a good example. Melvin Capital, they had some shorts that went against them. I don't even know if they necessarily used a lot of leverage. It's just one position went against them a lot, or maybe more, I don't know. But GME. So I don't think, LTCM. And also the problem with LTCM was they were too big for the markets. They were too big of a fish in a too small of a pond. So everyone started trading against them and, making things worse because, everyone knew how they were positioned. So it was just like a waterfall effect. This is why I'm always so careful about the liquidity. I don't want to be more than 1 or 2% of the daily volume in any stock any given day. Yeah, absolutely. I mean, you can just go back, look at the Dow Jones because it's very easy. You have data back to 1915 in TC2000. And you can see, I mean, the 70s, I would say if you look at 65 to 85, that was a brutal time, man. Not very trending markets. And then you look at 85 to 2000, I mean, just, free money most of the time. And since 2009 lows, we've also been, kind of straight up. So you gotta be aware of the, market conditions, especially if you're, trying to have a longer term approach. But if you're a very short term swing trader or a day trader, obviously it's not as important. And obviously, during this time frame, this is obviously just 30 stocks. Obviously, there were if there's a book, I don't remember what the name of the book is, but it goes through a lot of charts. There were a lot of stocks that made big moves during this time. This is just an index of 30 stocks. But there were, a lot of stocks that had great businesses, a lot of things going on that made 1,000% of moves during this time. Yeah, commodities. Yeah, if you look, if you read the Market Wizards books, there were a lot of or not a lot of, but there were several people in the earlier Market Wizards books that made, they turned like 10,000 into like hundreds of millions trading commodities, because those were trending during the 70s. Inflation was high, and commodities did really well. I don't know if they did well because of the inflation, but I know that they did really well. A lot of money to be made. There's always something going on. Even if the stock market is slow, there's always some asset class doing well. Do you know why guys like me are rich? I actually thought about it. Because people overestimate their abilities. I just looked at something like GME, where, on 2 trades, like about a quarter of all the money I made in trading over 10 years came in a 1 month span on 2 trades on GME. Because millions of people came together and decided they're gonna be overconfident in a group. So I figure maybe I should be underconfident as much as possible, because that seems where the money is. I have no idea where that myth comes from, that drawdowns in day trading are smaller. I had some huge drawdowns when I was a day trader, much bigger than I have now. I don't know where that myth comes from. In day trading, since you do many more trades, if you're having some issues, I don't care if it's mentally or if you're slow to adapt to the market, you can chop your account up much, much faster than you can in swing trading. I think that's a total myth. I don't believe that one bit. The fact is, if you are a trader, no matter what, a trader with explosive returns, you're gonna have drawdowns no matter what. 20-30% are expected drawdowns. Doesn't matter if you swing trade or day trade. There's much more room for human error. You mean there's much less room for human error in day trading? I think all of these myths of day trading, it's all an illusion. I think it's all an illusion. I've been there. I've seen so many people fail. I don't believe one bit. Oh, day trading, it's less risky since you don't hold stocks overnight. What a bunch of bullcrap. Exactly. There's so many ways of losing money. It depends on your style. At the end of the day, it's about, finding something that fits your personality. That's the best trading method. Something that you own, and that's something that you're 100% comfortable with. Yeah, day trading sells more subscriptions. All these successful day traders selling subscriptions. All these multi-millionaire day traders teaching others to make multi-millions. They're selling these services. Kind of funny how it works. Well, if indices break out, breakouts are gonna work again. Indices have been stuck in a range. But if they break out of the range and start going higher, breakouts are gonna work really well again. But I discovered these, how liquid these ETFs are. I'm gonna trade much more ETFs going forward. Some of these triple ETFs, man, they can make enormous moves when they trend. I thought about trading crypto. Yeah, I've traded a lot of crypto over the years. But I don't trade crypto outright. I trade this market, like the crypto-related stocks. Those things make even bigger moves than the cryptos themselves. I mean, just this year, I nailed Mara, I nailed Riot, I nailed GBTC from way low. I had several good trades. Like, these things make big moves. I nailed SI on this flag here. I nailed MSTR. I nailed ETHC entry. I fucked up the exit. I literally bought it here on the trendline break, then I sold it somewhere here. I mean, I traded a lot of crypto-related names. You don't have to trade crypto outright to trade crypto. There's a lot of stock, what do you call it, proxies in the stock market, and many of them move faster than the underlying. Yeah, I mean, you could also see it, it's building a series of lower highs, which means it's gonna roll over. Yeah, but it's also building a series of higher lows. So that's why you gotta wait until actually it resolves. That's why it's, you can't anticipate inside of a range. You have no idea. You have to wait for, and you have to let it prove true. You have to let it tell you, okay? That's the key thing. You have to let the stock or the index or whatever you're trading You have to let it tell you and guide you. One main reason people get in trouble trading is they don't listen. They don't let the stock tell them what they should do. Instead, they try to impose their will on the stock and the stock market, and then things go to because, you know, the stock market really doesn't give a shit about you or your feelings or your opinions or your background or your monetary goals or your monthly profit target. Guys, do you know what your best friend is in trading? Your best friend? This right here. This white line. Do you know what it is? That's your stop, exactly. That's your best friend. That's your only friend in the stock market. If you have stops, if you have an exit plan, you're never gonna be a bag holder. I mean, look, the thing is, it's fine if you're a long-term investor, for example. Like, it's fine to be in a drawdown. Like, it's fine if your stock pulls back 50%. That's part of the game. But if you bought something expecting it would go straight up forever and ever and ever because, I don't know, someone on social media told you, and then it goes down and then you don't know what to do, well, then you're a bag holder. The hardest thing is sticking to a setup, to one narrow set of setups and time frame. I think, and it takes a lot of patience. Like, if you're new, you kind of, there's nothing wrong with jumping around, but that's how you learn. Trying some swing trading, trying some scalping, trying some day trading. But after a few years trial of error, you kind of have to settle for something, and then you stick to it. Because if you study the most successful traders, like if you read like market wizards, they found their niche. And it doesn't matter, like, you stop, trying out new approaches. But if you find something that works, you stick to it. And obviously, you can, try different things on the side. But, jumping around from one thing to another, it rarely leads to success. But you should always, always test out. Even if you only, stick to one certain approach because it works, doesn't mean you stop trying out other things, because you don't know, if you may find something else that works really well. FoxF, it looks like a pretty decent setup. Yeah, this is a really good setup. It has a previous trend, very orderly and linear. Look how nice it's been surfing the 10 and 20 day, and now it's kind of surfing the 20, building higher lows, getting tighter. Very good. Looks pretty decent. I don't think this is the type of setup that's gonna have multi-week follow through, but for very like short-term swing trading, 3 to 5 days, I think this is a good setup. And the lower your time frame, the more trades you're gonna generate, the more trade ideas you're gonna generate. Well, it's kind of a beaten down name, and these types of names, they kind of, like, the big runs usually happen when there is, when a stock is above its moving averages. Something like this in a multi-month downtrend, it's never been in an uptrend. I mean, the odds are low. I mean, I'm not saying you can't go to 230 from here, but it's just not the type of setups where big moves start. Yeah, I mean, yeah, it's a nice looking flag. It looks okay. Retail, what are the retail related names doing? I know the retail ETF looks pretty. Had a huge run though. But much of it was also GameStop. Like this move here, this was very GameStop, because of GameStop. UPSD. In less than 2 weeks. Oh. Yeah, it's actually a double from the lows. Yep. Now what we want to see is this thing go sideways, pull back, go sideways for a couple of weeks, let the 10 and 20 day catch up, and then we're going to look for setup. Because next leg higher, this thing could easily go to 200 plus. This has definitely shown leadership qualities, from the day I bought it on the EP. Long signal, I mean, look, yeah, absolutely. It's been building higher lows, reclaim it to 200 day. Like, I mean, it could be a long. I mean, this is the type of setup that has been working over the past week. Yeah, I mean it could be. I'm gonna pass on it. It's not really my type of setup. I'm gonna let it set up a little bit more, get out of the woods first. But for a shorter term swing trader, it could be a setup, absolutely. Dude, this thing doesn't even trade. You should really have a volume cutoff on your stocks. It's traded 1.1 thousand. It's traded 10,000 worth of stock today, man. GME is trying to poke out of this range. It looks kind of good on the weekly. I'm not gonna lie, GME looks fucking great on the weekly. It looks like similar to AMC like 2 weeks ago. But are we gonna pull a rabbit out of this hat again for the third time? Not sure. Coupang. Yeah, it looks like all the others. It's been bouncing for over a week now, and yeah. What most of these things need, they need to go sideways. Pull back, go sideways for a week or two. Get some real, flag setups. That's what those are the setups where big moves happen, generally. Man, this thing looks great. It made a huge move, and now it's been building higher lows for like 3 months. And it has this range. It hasn't really broken out of this range yet, but it's like 189 or so. It's a range break. Kind of reminds me a little bit about DQ, but DQ didn't have that huge previous move, and then big pullback. This thing was just a straight up high tide flag, or maybe something like Celsius. It looks a bit similar. It does look a bit similar. Yeah, this is why I really don't like mentioning stocks I really like, because as soon as I say I really like something, people jump on it. That's the problem. That's the problem. Now, this isn't really a illiquid stock, but you have enough people blindly following you. It's not a good thing. Well, it's not good for them. Like, if you don't understand why GME is a really beautiful setup, you shouldn't be touching it. It's just that easy. It's that simple. Well, it's not like I created... look, everyone and their mother is watching this stock. There's like millions of people on Wall Street Bets watching this thing. Like, they all see the same thing. It's starting to break out of this range. Every single schmuck on Twitter is, doing the same technical analysis on it, I mean, it's not rocket science we're talking about.